Right, so moved into the market finally after a fair bit of choppiness. We've been waiting for this trendline break to move up into towards yesterday's highs. Now, we finally got this change in character. Um, the volume point control um, has been holding as support on the breakout. We've got this, we had this bull hammer, and we're getting a move up through the highs. So I just basically bought a market on the 5 minute. We're above the 20 EMA. Um, and we're heading higher, eating into the longs, the shorts that have been building throughout the day. We've got some news over here. We have the clear out, and now we're moving up. And this Dow was the cleanest of the indexes in terms of the structure, so this is why we went for this one. So I've just reduced the position by a couple at the end of that 5 minute as we moved into the highs in London. I can't go break even yet because this can easily come back down and fill whatever price imbalances have been left behind on that initial spike. And the plan will be to move to break even once we've closed above the London equities hours highs. So the motivation behind this trade is that we cleared these lows, we swept them all the way down into this volume, and we've been building bids back above these lows. We picked up liquidity to move higher. Now I should in fact move the target area above the equal highs over here. So we've drawn some volume areas where I expect there to be prospects of a move into this grade areas through the resistances. Yesterday's highs, equal highs over here. Let's pop up into here. If we can get above there, then it's a nice move into resistance. This is what we're aiming. Once we're through here up to there, we'll move to break even. Now I'm actually reluctant to move to break even because we haven't seen a pullback bullish structure to go higher. We're running through that liquidity as I expected. So we'll take some off at this point. See if we can move up to the resistance before we do that. We'll just set an alarm for that purpose. Taking some off there. It's running through this volume, which is a good sign. Good sign. So what we're hoping for now is this to be support. And then we can, if this comes back down, up and breaks the prior highs, then we'll move to break even. Now, on this 15-minute time frame, we've got the 38.2 marrying up with our entry point. So I'm not very comfortable with that. If this fails to act as support on the pullback here, then we're looking at the prospects of a break. Okay, let's look at this support. Hold on. So we've got the point control up here now. Pull back into here. Asian lows. If this were to fail, then we're breaking the trend line and we're eating into the 38.2 and where we got involved. So I've taken 60% of the position off, and if we close below this support, if we can't hold above this, then I'll have to move to break even on the rest. I want to see a bearish close and then a bullish close to break even. Or if this fails to hold as support, so we've got the price moving in here into a 38.2 of the 5-minute bullish impulse. This is the 38.2 over here, marrying up with the volume point control of today's range. Trendline support, horizontal support as per Asian lows, Asian equity hour lows, that is, Tokyo. So if it fails to show bullish tendency structure here, I'll close the trade manually. We'll eat into some of the equity made on the trade, but we'll end the day with a positive balance. Not really what we're here for, but covering commissions and a little bit of my time, nonetheless. Right, so at this juncture, we're tapping into, got 25 seconds to the close, we're tapping into this important support area. If this were to fail, then I suspect if we don't get a build-up of bullish structure in here, then this trade is going to fail. We'll just have to cut our losses. Well, yeah, losses of the equity that has already been taken up here. It's a shame that candle is a bearish candle and it didn't close bullish with a hammer wick. I suspect that we're coming right the way back down here. What is encouraging is this dollar has failed to break out of the daily trendline resistance and is being wedged lower uh, for a potential lower low, and then the short squeeze up depending on tomorrow's data. Is it tomorrow's data? I'm not sure it's tomorrow. Hold on. Sorry, Thursday data. So we've got plenty of time for a peak formation on the downside to build and the dollar for an explosive move higher. So that plays well for our bullish thesis in the stocks for the day. Um, this correction is a firm correction, and I think this can tap up into this resistance. What will that be? Let's have a look what that will be on the 62%. Yeah, 62% filo. Failed to make lower lows, so I think this goes a bit higher. What's also encouraging is this correction is a nice steady correction which would be expected to decelerate in here and move up for a continuation high. If this were particularly strong, then no good. So now what we've got our eyes on is this gap, this price imbalance over here. So let's see if this can hold over here, top of the imbalance. That's the sort of last support area before moving into our entry. So we're getting support at the marked out area of the Tokyo lows where this broke down. So the thesis is for a continuation higher to break these highs. So impulse correction, new impulse, move to break even, bullish structure being built for the continuation higher. Wouldn't that just be perfect? I mean, that would be textbook. Alternatively, what we can see is double top, breaking structure, bearish scenario playing out. So we'll be looking for signs of failure to take some more off. So for this purpose, we move to the 10-minute chart, because if we were looking for signs for failure on the 5 or even worse on the 1, your emotions will determine potentially a premature exit, because you can get choppiness in here and you'll start seeing bearish candles. Well, this is why I have my candles this color instead of bearish candles being red, because you tend to your brain is tuned into a negative sentiment on the color red. That's just how we program traffic lights and all that sort of thing. The red mark at school, which I often got, So anyway, so I'd rather look for a more significant indication on a higher time frame candle or candles that this is petering out. So rather than the 5-minute, because what we can have here is we'll have this bullish move up 13 seconds for the close, and we're going to see a potentially a bearish candle, and that's where your emotions set in. So if we move to a 10-minute chart, then on a 10-minute close, that is signifying to me more of a significant indication that this trade is failing. We want to see a 10-minute bullish close to break even. If we get a 10-minute bearish close, we take another 2 off and we wait. So we got this bearish 10-minute close, but we made a higher low, so that's good. But I did take one off, and we're letting 30% of the trade now run. And we'll just leave it and let it run to the stop. To end positive for the day, we've only got 30% of the position left, so we'll end up positive. And there's every chance still that this can still hold. Over here as the support. We have got this pretty firm top in place, however, but that's not to say that this can't continue up. As long as it holds above these volumes. Okay, so we've got this very firm break of structure. So we've got the trend line support, we've got the structure that was the support that we were talking about earlier. Now, typically, I mean, that's a pretty strong move that's playing out on the 10-minute chart. I'd anticipate the support holding, so it's eating into our equity for the day. And prior to taking out our stop, I'd anticipate a build up of support, a retest up into the highs. And I think at that point, what we can do is look to move it up to break even, because there are still prospects for a continuation higher. This is clearing out the length in this trade, in this move up. So there are, it would be unwise to just come out of the position. So ideally, we want to see, okay, so this move up, we can move to break even, and then if this were to continue down, then so be it. We're out of the trade with a 0.5% gain on the day. Or this will continue higher, having picked up the liquidity that it wants to move up with. If we look on the longer term charts, if we look at, say, the daily, as I said, we want to move up into the 61.8. Oh, it's already had that, is it? No, that's on a different time frame. So the 61.8 is up in our target, basically. Now you've got this resistance block that it's failing at. So that's to bear note. But again, we had higher closes, higher lows. This, if this had been a dump to break this support and a correction up, the thesis is bearish. But because this is a higher low, and the trend line is being supported